Mr. No World. I'm back with a new video. In this video, I'm just going to show you guys how I go about analyzing the chart and really come about how I depict my bias on the high time frame. And hopefully this should be able to help some of you guys out there who's also new to trading ICT concepts. Now, the first thing I do is always look at the economic calendar. As you guys can see, on Tuesday we have a news event on the dollar, and of course Wednesday as well, Thursday and Friday. So the CAD dollar also has an effect on the euro, on the dollar, sorry. So I would say pay attention to these red folders right here, as all these are all news drivers, especially on Friday. We have no news drivers on Monday, so I expect price to be sluggish on this day, really. But if you go into the chart, you can see on the monthly chart, the January chart is really drawing towards the December high right here, which I got it highlighted as a buy side liquidity, really. Now, if you trade ICT concepts, the market only seeks two things: liquidity pools as well as inefficiencies, or should I say fair value gaps, right? Now, the market seeks liquidity and rebalances inefficiencies, right? Now, right now, on the monthly, you can see there is an inefficiency right here. And we are literally drawing towards the high of December also. Today is the 21st of January, and we have essentially 10 days before the end of the month. With it being a heavy news week, I'm anticipating this week to be able to run December's high, trade into this fair value gap, and potential reverse from here and continue seeking lower prices after that. Now, if you go into the weekly chart, you can see price is in premium right now from this range, right? Now, if I were to draw a fib from this price point to there, you can see we are in premium right now. Now, what have price done? We've got a bearish order block. Price displaced and rejected off this bullish order block, and we also have a relative equal lows right here. So after displacing down, rejecting from this bullish order block, price then retrace right into this fair value gap. But the most important thing is that price did not respect this inefficiency right here. We traded through it. Now, if you're familiar with ICT inversions, this will become an inversion fair value gap, right? And once a PDA array, especially a fair value gap, gets disrespected, that should be able to tell you order flow is no longer, the order flow have already changed now, essentially, because if price had the intention to continue going down, what we would have done is basically use this fair value gap as an institutional order flow entry drill. So essentially this would be our entry right here to seek for lower prices, essentially attack this sell side liquidity. But we traded through this fair value gap, disrespecting this fair value gap. Why would price do that? It's because we have a significant liquidity pool right here, as well as a fair value gap. Like I said, price seeks liquidity, imbalance, inefficiencies in the market, right? Yeah. So if I go into the daily, before I even go into the daily, if we have a look onto Euro USD as well, you can see this the same scenario, right? If I go into the monthly, you can see this price is drawing to the sell side liquidity of December's low rate. And onto the weekly, you can see that we have traded into a bullish order block, price rejected, and I'm anticipating price to run this liquidity pool right here. Now, on the daily of the Euro USD, what do we have? We have a bullish order block, displacement, price came, traded inside the fair value gap and rejected and started going back up. But what is price reaching for? We have a fair value gap right here. Remember, I'm anticipating the DXY to be bullish, which means for the Euro USD, I'm favoring price to come and sweep the December's high, trade into this fair value gap and reverse for a bearish delivery, right? And for the DXY, what I'm anticipating is price to come and sweep this Thursday's low, trade into this fair value gap, reaccumulate more orders to run the December's high. And if you also pay attention right here, what do we have? We have a bearish order block, we displaced, price came and retraced back into this order block and it rejected. If you know your PDRAs, you know order block essentially is known for a resistance level, you know. So yeah, I'm expecting Monday to come and sweep the Thursday's low, reaccumulate more orders here, and continue a bullish run. Tap into this fair value gap, institutional order for entry drill, reverse for sell side delivery. So this is really it for my weekly commentary. Something simple, and of course, you know, throughout the day, Monday I'm not going to be trading, so I'm expecting Monday to really just be a sluggish day. We might trade up, Tuesday come and dip into it, or maybe Wednesday, but ideally I would want to favor Monday or Tuesday to sweep this fair value gap, this previous day low, tap into this fair value gap, creating a swing point for us to continue then rallying higher. I would be careful because we have a heavy news drivers this week, especially on Thursday. Thursday is really hard to navigate through, you know. I would definitely just be more cautious going into Thursday, especially Friday. You got core CPI price index on this day. I'm not looking for any trade setups on Monday. Ideally Tuesday or Wednesday could be the day I might look for something, but Thursday I'm expecting it to be the main driver of the week, simply because of, you know, how many news events we have on the USD on this day. I'm expecting the large portion of the weekly expansion really to be on this day. But yeah, just to touch on what my analysis again, I'm favoring a bullish DXY, favoring a bearish Euro USD,